Hi there, very good afternoon. Welcome back to ET Now. You're watching Market Fatafat with me, Kanishka Sarkar and Ankita Saxena. Time now to put the spotlight on another stock which is in focus, and that is Spine Labs, trading just about 1% lower right now. This despite reporting a very healthy second quarter. In fact, the revenue saw a good 6% growth and EBITDA saw a 69% growth on a sequential basis. And to understand what happened in the quarter gone by, all the key levers of growth, we are now joined by Amrish Rau, the Chairman and Managing Director, as well as the CEO at Spine Labs. Hi Amrish, very good afternoon. Thank you so much for joining us. Many congratulations on that result. And the second quarter, this was your second consecutive profitable quarter, right? So take us through what were the levers that made this profitability sustainable this time around.
See, over the last 2 years, what you would have seen is that we've been expanding our adjusted EBITDA margins. Our adjusted EBITDA margins from low single digits have now hit almost close to 20%. And that's really coming out of the fact that we are constantly winning in the marketplace. We're signing up new enterprises, new merchant, new businesses. At the same time, we don't necessarily need to increase the cost at the same pace at which merchants are coming on board or transactions are coming onto our platform. So adjusted EBITDA margins growth is very important. The other very important thing that we have done and we have really been focused on is what happens when it comes to the depreciation line and how the depreciation line trends. If you actually look at it, our move towards the profitable PAT position has been a continuous move over the last 18 months period.
Right, Mr. Rao, with several fintechs struggling with weak unit economics and margin pressure, you have guided for every 100 rupees of incremental contribution, margin converts into 52 to 57 rupees of EBITDA. What gives you the confidence that this level of operating leverage is sustainable, and what specifically protects Spine Labs from the kind of margin compression that we are seeing across the fintech sector?
See, one of the things to clarify is that we consider ourselves a tech company. And as a tech company, we have been able to charge for our services, both with banks and financial institutions, but also with merchants out there. The other piece to remember is that almost 17% of my revenues is actually coming out of global markets. And that number, again, used to be in single digits as recent as, I would say, about 18 months back. So what we are getting to see is we are getting to see our products and technology services absolutely fit into global markets. Those markets are higher margin markets. At the same time, when it comes to India, when we actually are charging for technology, which is on a per transaction basis, we've been able to ask our price there. And that's why we feel very comfortable that this EBITDA margin that we have been able to show is not like a one-off, or, I genuinely believe that there are many levers available for us to keep improving the EBITDA margin.
So that's about margins. But now let's talk about your guidance going forward. You've guided for about 20 to 25% revenue growth, right? So what gives you the confidence in sustaining this kind of a momentum over the next 8 to 12 quarters?
If you actually look at our business over the last 5 years, we've consistently grown at more than 25%. Payments is one industry where we are getting to see the inherent transaction growth already happening at about 25% and higher. But with our new products, new technologies going into many new areas, right now, we have become the second largest payments processor when it comes to bill payments on the BBPS platform. Our online payments business, for example, has grown on a year-on-year basis by more than 70%. When you look at what we are doing when it comes to international markets, we are in general opening up newer opportunities. And in the core business, we are getting to see inherent transaction growth. When you put those together, we feel quite comfortable with this growth rate that you mentioned there.
Right, Mr. Rao, your issuing business reported 33% growth. How big can this segment get, especially with the multi-country expansion?
See, let me clarify what we do on the issuing side of the business. Globally and also in India, debit card, credit card, prepaid card, gift cards are continuing to grow. But interestingly, what we have done is we've actually taken the concept around prepaid cards and gift cards and have been able to apply it into everyday use cases. For example, India's wallet, refunds, anything related to compensation vouchers is entirely run by Pine Labs on our issuing side of the business. We have great partnerships with all the top three e-commerce companies of India. At the same time, we have all the three Q-commerce companies in India using our platforms. And those businesses are actually growing, and the usage of our product has also been growing. Internationally, we've actually scored very good wins in Australia, in Singapore, also in UAE markets.
All right, so several wins across different geographies. That's the word coming in. Thanks, Amrish, for joining us today. And on that note, we'll let you go. Good luck for the future quarters as well.